Business conditions deteriorated in the month of February as cost of living pressures and cash flow problems stunted customer spending, leading to reduced sales. The Stanbic Bank Purchasing Managers Index for the first time in 6 months dropped to 46.6 from an 11-month high of 52.0 in January, indicating a drop in operating conditions.
The Kenya Purchasing Managers Index pointed to a decline in business conditions in the second month of 2023, the first since August last year, as cash flow issues and cost of living weighed on demand. The headline PMI registered below the 50.0 no change mark in February, dropping to 46.6 from an 11-month high of 52.0 in January. Output and new orders both recorded sharp falls, leading to renewed cuts in employment and purchasing. The downturn in sales led Kenyan companies to make renewed cuts to activity, employment, and purchasing in February. Output fell sharply and for the first time in 4 months, while input purchases fell for the first time since last August. While job losses were only mild overall, they were the highest since April 2021. The sharp fall in sales came amid reports that cost of living pressures and cash flow problems had stunted customer spending. At the same time, currency weakness and reports of increased tax burdens fed through a sharper rise in import costs. While some firms passed this cost onto the customers, the rate of charge inflation was broadly unchanged from January and much softer than that of input prices. In February, companies reported a sharp contraction in new order volumes following a solid upturn in January. CEOs note that customers had cut back spending due to high inflation and a lack of money in circulation. Firms also suffered from a marked fall in export sales, one of the fastest seen on record. Weri Mojenga for Lunchtime News.